So let's talk about the Forex market participants. If you have watched what is Forex trading, which is one of the first videos I have done on this series, you would have learned what Forex trading is all about. You would know that, like I mentioned, the foreign exchange market is the largest financial market in the world, with a volume of over 6.6 trillion, according to the 2019 Triennial Central Bank Survey of the FX and OTC derivative markets. Okay, now who are the participants, the major participants in this market? This is what we are going to be talking about today. We want to look at the people who participate mainly in the market. We have, as you can see on the screen, the central banks, the institutional traders, commercial banks, the brokers, individuals, the companies, okay, multinational companies. These are different participants that we see in the market. And this is where we are, the retail traders, individual retail traders. We are also participants in the market, but we're not the only ones participating in the market, because for someone new to the market, he may be thinking, oh, maybe whatever my mentor is doing may have effect on the market. So you decide you're going to trade according to just what your mentor is trading, because the market is dependent on what individuals like this person is doing in the market. No, these are all the participants that are involved in the market. The central bank is there, commercial banks. Commercial banks are especially one of the most important participants of the market, okay? Because the greatest volume of currency is usually traded in the interbank, okay? The commercial banks do about 50% of the participation in the market. They trade in the foreign exchange market, okay? The banks of all sizes trade currency with each other through electronic network in the interbank that I just mentioned. And they are involved in the market, okay? And they account for large percentage of total currency volume that exchange earned every day. In this over $6 trillion that I just mentioned is done in the market per day, okay? We also have the central bank. The central bank come into the market to kind of guide the economy, okay? The central banks of every country are very important participants. In fact, the most important participant, I would say, of the financial market, because the central bank is responsible for fixing the price of its native currency or Forex, okay? So this means that whatever action the central bank is taking in the foreign exchange is going to have effect on the market, because they usually would participate in the market, not just because they want to come in to make money, like, you know, retail traders like us buying and selling to make money. They participate in the market simply to stabilize or increase the competitiveness of the country's economy, okay? So the central bank may engage in currency intervention sometimes to make the currency either to appreciate in value or to depreciate in value. So it is not every time the central bank is coming into the market to just make its currency very attractive and appreciate in value. There are times, for instance, a central bank may come into the market to weaken its own currency by creating additional supply during period of long deflationary trend, okay? So, you know, we have inflation, we have deflation. A central bank would come to stabilize its economy when there's inflation by maybe increasing the interest rate. So you're going to hear of interest rate decisions of countries. You're going to hear different things in the market when it comes to fundamental analysis that can help you trade well. And this is done, okay? This involvement when it comes to monetary policy, fiscal policy, the monetary policy especially is handled by the central bank in place or in representing the nation's governments, okay? So they would also come in not only in inflationary period, but also in deflationary period to kind of reduce or weaken its own currency. They can do this by creating additional supply during this period, which then is used to purchase foreign currency. Then this weakens the economic currency, making the exports of the country more competitive in the global market. So because countries engage in international trade, okay, so they want their country's exports to be competitive. When the currency is too high, it may be difficult for other countries to relate with them in international trade, all right? Then we have not just the banks, not just the commercial banks and the central bank, there's also the multinational companies or corporations that are engaged in importing, exporting products and services, and they conduct forex transactions in order to pay for these products and services. So they would like to also buy or sell larger amounts compared to what individual retail traders like you and I will do in the market, okay? Then we have the institutional investors or hedge funds who also go into the market to, how do I explain this ones? Okay, so we have hedge funds making up like the second biggest collection of players in the foreign exchange market, next to the banks and the central bank. How? Because they kind of trade currencies for larger accounts, like pension fund, foundation, endowments, okay? They usually purchase and sell currencies that they trade in the market, okay? And they make speculative forex trades in the market. They would maybe buy from companies when the companies are afraid. Companies that want to trade in international trades are afraid of, okay, maybe being involved in a transaction, and then the value of the currency gets bigger than what they would have bought now, or the currency loses its value or something. The hedge funds are kind of like serving as like a middleman to help them in this regard. Well, you may do more research on this so that we do not waste too much time talking about this. Then I've mentioned the multinational corporations, okay, and then the individuals. So this is where you and I come in. We are the retail traders. We come in, we trade extremely low. The all millions of retail traders around the world, we are contributing less than 7% to the entire market, okay? So that helps you to know that you as an individual will not have the opportunity or the strength, the power in your hand to control the direction of the market. That's why one of the things I emphasize in most of my training is risk management. You will need to learn this as you begin to trade in the market, okay? So this is the different market participants we have, and now you are becoming one of the market participants by joining the retail trading team, okay? That is why you are here, I'm sure of that, right? Okay, so let's move on from here. We move to the next course.